What's up, Facebook? Ty Crandall with Credit Suite, and today we're going to be diving into where the business credit reporting agencies actually get your information. So you know what gets populated on your report, how it gets populated on your credit report, but most importantly, there's a lot of things in this process you can control that will actually affect the data that shows on your report, and there's stuff that you can control that actually affects your business credit scores. Surprisingly, there are certain business credit scores that will score you differently based on information you voluntarily provide to the reporting agencies versus information they may not have. So today we're going to decode this whole thing. We're going to look at where the business credit reporting agencies get your data. We're going to look at some sample business credit reports so you can see what it looks like on real business credit reports, and then we're even going to talk about what you can control in this process because, like I said, a lot of this you can control as well. And if you control certain aspects of what the reporting agencies have or know about you, then you can even give yourself a substantially better chance of getting loans and getting credit cards. So let's dive into the chalkboard today, not the whiteboard. So today we're talking about where the credit reporting agencies get your data in the business world. Now, before we dive in, don't forget we're talking about business credit here. So when we're talking about this information that's going to be populated on your actual business credit reports from the credit reporting agencies, or short for CRAs, it's important to note we're talking about the business credit reporting agencies. So this is basically based on business credit, which is can your business pay its bills on time? That's what your business credit report ultimately determines. This is independent of your owner's credit history. I'm not talking about consumer credit. I'm not talking about consumer credit reports here. It's all business. And again, the credit reporting agencies are all these kind of data points that you may not understand, but we're going to dive into. Jerome, welcome. Thanks for coming in. So let's dive in. First thing, there's a lot of different kinds of information and places that the business credit reporting agencies get your data. We're going to look at all of it. But what you need to know is that they will give you different weight on your profile and score based on where they're actually getting the data from. So let's dive into some of these things. So public records appear on your business credit reports. This classifies as bankruptcies, tax liens, for example, other kind of liens, judgments, anything that they actually get in the court system. Lamar, what's up, man? Thanks for coming in. The filing dates, resolutions, all these type of things are here. Okay, it can even have lawsuits, and this is very surprising to business owners. If you are at all involved in a lawsuit, it will also be here in public records. Whether you're the one filing the lawsuit or getting sued, all of this will appear in this public records section on your business credit report. And again, in a lot of cases, they're getting this from the courts themselves. The bankruptcies, the judgments, the filing dates of bankruptcies, the lawsuits, all this information is really coming from the actual courts. So that's a great source of data for the reporting agencies. The second source of data for the business reporting agencies is IRS information. Okay, so this comes directly from the IRS, might have to do with tax liens, for example, in different counties. Mostly revolving liens here. They're not in a lot of cases getting any much of other information, although they can get some financial information here. In a lot of cases, what they're looking for is tax liens. So they're getting public records, they're also getting tax lien data from the IRS as well. So another place is voluntary reporting by creditors. Now, this is a big deal in our world. In the consumer credit world, most credit issuers will report it to the reporting agencies. But in the business world, it's voluntary. So a lot of credit issuers in the consumer credit world mandate that they report. That's a requirement. But in the commercial world, when we talk about Dun & Bradstreet, Equifax, and Experian, it's really done by choice. So when we look at these credit issuers, it's voluntary. A lot of them don't have to report. Most of them don't. About 97% of trade vendors don't report the data. Guys, this is why it's so hard to build business credit if you don't know what you're doing. Because we're used to these credit issuers just reporting data to the reporting agencies. But in the business world, it's all voluntary. So most choose not to report, which is why you have to be intentional to build your business credit. So Experian and the rest of them obviously strongly recommend that you should report because, you know, borrowers are going to pay faster if they know there's a repercussion if they pay late, okay? And it rewards them for paying on time because that's what gives them good credit. So the bottom line is that the reporting agencies recommend recommend that you report and want the credit issuers to report, but many don't. Okay, plus you can also get alerts. So credit issuers can get alerts if things change on people's credit reports. So there's a lot of benefits here for credit issuers to report data to the business reporting agencies, but a lot don't, even though the reporting agencies strongly recommend they do, even though they'll even be able to get alerts when the status changes. So this alerts is a big deal, and let me explain to you. What happens in the commercial world is a lot of commercial reporting agencies, or excuse me, a lot of people that extend credit to you. They extend credit cards, they extend loans. What happens is they get notices on alerts automatically when things change on your commercial credit report. Let's say your scores dropped. Let's say you overextended yourself and went well beyond the days beyond terms you normally pay. What happens here is that commercial reporting agencies send alerts to your actual credit issuers, and ultimately, in a lot of cases, they will remove credit, they will call credit lines due, they will reduce the amount of credit you have. We see this all the time. So many people come into us, and the reason they're coming to us for business credit is because all of a sudden their credit line got called due. They have a $50,000 credit line, they have $40,000 owed. Now the bank says they want their $40,000 back within 2 weeks. Or the limits get decreased on credit cards or credit lines. Or they get denied by loans that they actually thought they were approved for because something changes on their commercial credit reports. So it's important to note that the reporting agencies have this alert feature that if anything changes even with one credit issuer, the rest of them can mess up the credit that you have with them as well because they actually have these alerts. Okay, so another great place is self-reporting, and this is areas that you can control of what they actually have on your commercial reports, okay? So part of this is when you're filling out credit applications. And this is really important on the consumer and the commercial side. What you need to know is that when you're talking about consumer and commercial credit reports, you're self-reporting a lot of the data based on what you're putting on credit applications. So your industry classification, your time in business, your number of employees, this is stuff you're self-reporting. Your DUNS number when you apply, or when you apply for your DUNS number, that address gets put on there. Physical addresses for DBA. So let me give you an example here. So I just cleared up something with Dun & Bradstreet because they have two addresses for us. Well, they have two addresses for us because one credit issuer that we have, American Airlines, a credit card they gave us is to our mailing address. So Dun & Bradstreet populated a whole different DUNS number for us based on that separate mailing address. So we contacted them and got it put onto one actual, one different account instead of two. The bottom line is that we're the ones that put that address on the application. So that's what created the issue. So get one address, stick to your address, use that address on all of your applications. It's very important because if you use multiple addresses, Dun & Bradstreet issues a DUNS number based on your business in a separate location. So if they see that your business is there and have a different address, then what happens is they will then come in and automatically create a separate profile for you. So you control a lot of what these reporting agencies have based on what you're actually supplying on applications. So whenever you apply for any kind of utility account like cell phone or electric or any of those things, or an actual hard landline phone, internet, whenever you're filling out an application, know that the information you're giving these credit issuers will also ultimately be the same data that you're giving to the reporting agencies that will populate onto your credit report. So self-reporting. Now, this is another area you can control that you need to know about. This is very important. D&B Rating is the second most popular credit score that D&B offers. And it's based on the financial health of your company based on financial data. So it's the financial strength. It's indicated by your net worth, okay? It will determine how much capital you're possibly extended, okay? It shows if your business or new, or if you already have tax return data, for example, okay? And what happens is they have different risk indicators or risk categories based on the information they have or they don't have. So what they have, they will actually put you into different D&B ratings if they have your tax returns versus if they don't, okay? All the way down to the lowest rating they have, which is a 5, okay? So let me what you need to know. Do you have tax returns? Are they good or are they bad? If you have tax returns that show good revenues and good profits, get them to Dun & Bradstreet. You can go to Dun & Bradstreet's iUpdate service. You can voluntarily send them your financial data, Experian, Equifax, and D&B. You can send them your tax returns, and they will automatically populate the data on your actual credit reports. Here, I'll show you what that looks like. Now, it's important to note that if you don't supply them the data, then what happens is you go in to a different rating with them. So the way Dun & Bradstreet, all of their ratings work is they say, look, if we have your tax returns, we put you in this category. If we don't have them, we put you in this category. So you can have a much better chance of getting loans and getting higher loan amounts on the loans you get if they actually have your data. And I'll try to show you some examples here on real commercial credit reports so you can see what this looks like, the difference between if they have your data or they don't have your data. Okay, so let me pull up a few different examples here and I'll show you. Okay, so here's a couple examples. So if we look at a commercial credit report here, let's look at some where there's no data. You see here, business facts, Experian report, this space is empty. This space, they have a little bit more information. Here they have the SIC code of the actual business. Here we can see they have the SIC code. They also have employees and they also have total number of sales. So you can see, why does this company have sales totals and this company doesn't? Well, the difference is because with this company, they were actually supplied the tax returns, which gives this person a better rating that will help them get access to more money. Okay, here's another company here where you can see nonprofit. They've provided that. Number of employees, SIC code, but you can see, guys, that there's absolutely no financial data here. So again, you can control this. You can actually control whether or not the reporting agencies actually have your revenues and profits. You can control if those are on your credit report or not. And I'll show you some more examples here of people that actually have the financial data on their credit report versus companies that don't. So I want to pull up. Okay, so let me show you some examples here. So if we look at this, real commercial credit reports, okay, here's somebody that supplied their financial data. So you can see here that they know the sales. They're putting the sales volume right on the credit report. Kevin, thanks for coming, man. Thanks for going crazy on the hearts. You can see here they don't have that data, so it's blank. You can see here they do have sales data, and so it's complete. We can see here they don't have a sales data. Okay, we can see here they do have it. We can see here they don't have it. So you can see that some credit reports have the amount of sales you have versus not. So this brings up an important point here. A lot of people ask, can you get loans based only on business credit? And the answer typically is no, and here's why. Because you can when you start giving that kind of data to the reporting agencies. When they start knowing your tax return, showing your sales, showing your revenue volume, your chances of getting loans based on that report is much better. Because the reporting agency is showing your payment history, your scores, and your financial data. So that triggers a rating for your business, telling potential credit issuers and lenders, hey, we have financial data from this company, and we've now created a score based on all the financial data and also based on payment performance, etc. That's different than them telling the credit issuers and lenders we don't have financial data. So guys, you can control this. Every one of the reporting agencies, you can give them voluntarily your tax returns if they're good. They'll populate what D&B calls a rating. They all have different names for the scores, and this can help you become more lendable and help you get more money as well. So another source that the reporting agencies get is called shared data. So this is payment data where accounts are basically non-reporting vendors, but they're giving a reference. And these trade references can actually be provided. So you can come in and create and put statements on your commercial credit report. You can also come in here and have trade references put on your credit report too. So again, this whole category is basically self-reporting. The stuff you put on applications gets put on your credit reports. If you give them financial data or don't, that determines certain scores that go on your commercial credit reports. The shared data, whether you're providing statements or trade references, go on your credit reports as well. This is a big one. It's called UCC filings. We're not used to this in the consumer world. So this is basically when you've got a loan. Ultimately, that's what it comes down to. A lender gives you a loan and files a UCC filing. Let me go and see if I can pull up some UCC filings for you. So a UCC filing is It's kind of cool. You need to know how this works because we've actually had a problem getting a merchant account because they said, you have a UCC filing on your credit report. We're like, yeah, because we have a loan, but we pay that loan perfectly. And we can even give you our payment history. So what you need to know is that a UCC filing is not a bad thing. What it ultimately is it just basically tells others that look at your credit report that you have outstanding loans. That's basically what UCC filings are. Okay, so let me show you an example here. Here's what it looks like on a commercial credit report. You can see here, UCC filings, Secretary of State. Here's the collateral, filing number, etc. Here's another UCC filing, okay? You can see all these UCC filings by the Screen Actors Build right here. Okay, Wilshire, we can see the date that it was filed. So what these do is UCC filings tell people that are looking at your commercial credit report that you have outstanding loans. That's what UCC filings are. They're basically telling them, hey, look, this person has outstanding loans. Let me show you an actual Experian report as well. Here's an Experian report as well. You can see here that these are actual UCC filings. Any UCC filings go in this UCC filing section. Okay, and we can see here the number of UCC filings. So these indicate the number of loans you have. Let me tell you why this is important. When you talk to a lender and they tell you they report to the Business Credit Reporting Agency, there's a big difference between these two sections. Are they reporting it as a trade line? This would mean that your payment history, how you pay, will report on the report, and that payment history will calculate into your score. How you pay will calculate here. UCC filings, as you can see, are absolutely not trade data. It's in a whole different section. Why this is important is because these will show how many loans you have outstanding, but they will not calculate into your actual score. So when you talk to a lender and you say, do you report to the Business Credit Reporting Agency? And they say yes, you need to say, do you report just a UCC filing? Or do you report my trade data, my payment history? The trade data and payment history is important because this calculates into your score. The UCC filing just tells people you have a loan, but it doesn't count as a trade line, so it doesn't calculate into your score, which means if you have a perfectly paid as agreed loan that doesn't report as a trade and only a UCC, your credit would not be better because of that. So some things to keep in mind. So UCC filings, do you have loans? This is basically told to them by lenders that issue you loans. Collection filings, okay? Do you have collections with collection agency? If so, the collector, the actual creditor themselves, or the collection agency can report it. This is a pretty big deal. As we've talked about here, voluntary reporting by credit issuers. A lot of credit issuers don't report your data to the reporting agencies like Experian, but they will report collection data. So you need to talk to credit issuers. When they're issuing you credit, you say, who do you report to? And they tell you Dun & Bradstreet, Equifax, or Experian. Then the question to ask them is, do you report payment history? Or do you just report if I were to default? Because a lot of times they may say, well, yeah, we report to Experian Commercial, but what they're really doing is only reporting the loan, UCC filing if it's a loan, or collection if you default. They don't actually report your trade history, your payment history. So these are questions that you need to ask. Federal government, okay, company grants, loans you have, SBA, for example, contractors, debarment, excursion from items like contracts. So anything to do, fraud, anything to do with the federal government, they report to the reporting agencies. So any indiscretions you have or anything like that that gets caught by them can also show on your credit reports as well. Believe it or not, press releases, news, things they discover through the media and directories like Yellow Pages, etc. They can also populate on your business credit report as well. Business registrations. This one, guys, is really, really, really important. Your incorporated date, the current filing status, your state, your city, your county, your courts. So business registrations come from Secretary of State. It's a really big deal. Because there's a lot of information you give the Secretary of State. And here's what you need to know, is that the reporting agencies, as I've probably shown you before, will give you a failing score even if you have no credit. If they have your SIC code. So here's somebody that has a 28 score, 1,000 recommended in credit, but you see they have no trade history. This is the bottom. I can't scroll down further. Their credit report has no trade accounts. It's all zeros. Well, this person was given a failing score because they came in here and they actually know the company exists and have an SIC code. And with an SIC code alone, then what will happen is they'll populate a report with a failing score. Now, if this person comes in and gets even one trade line, so this person has one account probably with Uline, that one account took them from that same 28 score up to a good score. So even one account can take you from bad to good, but you need to know you can have a bad score without having any actual credit because they know your SIC. So the reason I bring this up at this point is because if you're coming in and talking about registrations, they get a lot of this data from your Secretary of State. So when you provide annual reports, for example, then that data is what actually gets reported to the actual credit reporting agencies. And here I'm going to give you an example of how this actually works. So you can see that when I actually do, and let me do a real quick search and I'll come back. So you can see here that here's our data with the Florida Secretary of State. It's called sunbiz.org. Okay, here's our company data, and you can see all this data here. So what happens is this data is easily available to anybody that wants it. It's public record. This annual report data, all these different types of things, this is where they get the data that actually goes on to your business credit reports. And you can see here that there's a lot of information here. They even will have sometimes your SIC code. We'll have with some states your EIN. So again, what happens is your Secretary of State, for an example, gives information, or the reporting agencies get business registration information from them. This is how they know you exist. Now, they also may get registration information from utility companies. So if you set up utilities, they get it from there as well. But you mostly need to be conscious of your Secretary of State. The annual reports and other data you give them becomes very important. Okay, incorporation filings, again, state, corporation, divisional financial reports. What you're providing your Secretary of State is another place that they're getting data as well. And they also mine the website, the online, Google, Yelp, etc. Okay, they will come into a complete site and they will fill in gaps with information they can get from mining data online. Okay, so this is why I constantly say the information on Google and Yelp and Bing all needs to be congruent, because if it's not congruent, the reporting agencies can actually populate incorrect information. So a lot of things to know here. Okay, first of all, the reporting agencies waste a lot of this different data based on where they're getting it from. Public records are on your credit report. Bankruptcies, judgments, liens, we're used to that. We're not used to lawsuits. Lawsuits show up on your public records as well, which is surprising to a lot of people. They get information from the IRS, tax filings, liens, etc. They get voluntary information from credit issuers that choose to report to them. A lot don't. So you always want to ask your credit issuers if they report, and you want to make sure they report it as a trade line, not just unless you file collection. This whole column is all self-reporting data. This is the stuff you put on credit applications. You need to know what you put on credit applications will oftentimes show on your credit reports. If you don't want it on your credit report, be conscious of putting it on your credit app. You put it on there, it's probably going to end up on your credit reports. Don't forget, each reporting agency has a different rating based on what financial data they have about you. If you have good tax returns with profits and revenues, send them to reporting agencies like D&B, Experian, and Equifax that can give you a higher rating that helps make you more lendable. Shared data. If you're using trade references, for example, those can report. Statements you electively choose to put on your credit report, those can show there as well. UCC filings. When you get loans, a lot of lenders file these to show you have loans. Be careful. If somebody tells you they report the loan on your business report, you need to ask, are you just filing reporting a UCC filing? Or are you actually reporting the actual loan where I get credit for the payment history? You need to know that. Same with collections. If they tell you they're voluntarily reporting to a reporting agency like Experian, you need to make sure it's not just collection data, it's actually payment history that's reporting on there. The government, grants, liens, all different types of information they have. The media, directories like Yellow Pages, okay? Even places like Google, Yelp, they get all this kind of information. They also get business registrations when you set up new utilities. They get it from your corporation when you file your annual reports. all of this information is where they're getting the data from to actually populate onto your commercial credit report. As we talked about, a lot of stuff you control. About a third of that stuff you control. You control if they have financial data. You control what you put on an application. You control shared data, statements that you put on there. You control whether or not you're putting trade references on there, etc. And some of the stuff you can't control. You control what you put on your annual reports. You need to know that when you're filling out stuff with the Secretary of State, utility companies, credit issuers, lenders, when you're filling out these applications, be conscious of what you're doing, because they will actually, a lot of that will populate on your report. The stuff you put in Yelp and Bing and Yahoo, all that can populate on your report. So make sure your information is congruent online. It's the same everywhere. Your bank statement your bank account has the same address as the Secretary of State. Secretary of State has the same address as what's on the application. Address in Yelp and Bing and Yahoo is the same as what's on the application. Make sure it's all congruent so you don't have inaccuracies on your credit report. If you have good tax returns, submit them to the reporting agencies to get better financial ratings that'll help make you more lendable. Your sales, as I've shown you, will then show up on your actual credit report. Okay, so there's a difference here between whether or not they don't have sales and they only have your SIC, or a company where they do have sales and they actually say how much you generate. And guys, you have to understand, this absolutely will help calculate in how much money you're recommended for. Part of the reason this company is recommended for $750,000 in funding is because they have almost $5 million in sales, okay? So, Kevin, I appreciate that. So keep that in mind. There's aspects of this you can control. Keep in mind that years on file, this kind of information, date incorporated, SIC code, this is based on data that's supplied. Now, if you don't like it, solicit them. Equifax and Experian will let you, if you have credit monitoring, they'll let you dispute it right to them. D&B will do it through a service called iUpdate. Okay, I go through regularly all my reports and I go and update them on anything I want changed, even if it's not affecting my score. Okay, and a lot of times they'll say, oh, that's supplied by one of your creditors, that's not us. And I'll say, yeah, it is you. I check with my creditors. So sometimes you have to push them, but they will update your information as well. It's much easier to update information in the business world than it is in the consumer world. So hopefully you got a lot of information. I get a lot of questions about this. Well, why do I have a credit report when I have no credit? Where are they getting this data from? Well, that's where they're getting it from. They're getting it from banks. They're getting it from your Secretary of State. They're getting it from lenders. They're getting it from credit issuers. They're getting it from information you put on applications. They're getting it from financial data you supply to them. They're getting it from all these different sources, collection companies. They're getting it from the IRS. They're getting it from all these different places. So now you know where they get the data from, and you know what to control when you're filling out applications, Secretary of State, etc. So you can control the data they have and therefore end up having the best credit profile and the best score. If you miss this, go back to Facebook. It's there indefinitely. You can watch it in its entirety. And I look forward to seeing you in the weeks to come. Every Thursday at 11 o'clock Eastern, we're live here on Facebook as we talk about more things you need to know to help you get credit and financing for your business. Thanks for the loves. Thanks for the shares. Thanks for the hearts. Thanks for the likes. And I appreciate the comments and engagement. I hope you all have a great day, and I look forward to talking to you next Thursday at 11 o'clock Eastern here on Facebook. Thanks, everybody. Have a great day.